In this final section, we're going to be putting everything you have learned together into an actionable trading plan that you can use every day in the markets. The basic principle that you need to always keep in mind is not that you should be following this rigidly step by step, but rather that you should be looking to apply the principles over and over again. For example, the main themes of this training are as follows. You need a good understanding of the overall markets, not just how to trade Forex specifically. Fundamental analysis should be the foundation of every trade you take. And the key to fundamentals is understanding the reasons behind each move. Risk management should be incorporated into every single element of your trading business so that you have multiple things protecting you from losses at all times. Technical analysis should only be used as a simple method of visualizing a trade to give it structure. And all technical concepts are more or less the same when it comes to effectiveness. Trading psychology should be your number one focus once you have the basic 4 pillars understood and the skill set learned. Working on your inner game is the key to consistent profitability. And the ultimate goal for you is to be trading in the zone at all times. Everything in this course is more than enough knowledge for you to create a trading plan with which you can start practicing and developing your skills further. Remember, just like buying the best golf clubs will not make you good at golf, consistently hunting more and more knowledge will not make you a better trader. It is knowledge first, practice and skill building second, followed by inner game from that point on. With all this in mind, it's time to create the trading plan so that you can move on from the knowledge building stage and onto the skill building. So there are several things we'll be focusing on here, but the main goal will be to build up a routine that you can follow every day no matter what the market conditions may be. Your routine should be comprised of 4 distinct elements. Number 1 is your knowledge phase. Number 2 is your analysis phase. Number 3 is your execution phase, while number 4 is your review phase. To make this clear and simple, we will go through each one of these phases, giving you the tools you'll need for each one, and then at the end of this session, or section, we'll look at the routine of a successful professional, me, along with a selection of trading strategies that we use here, that you can use as well, depending on your trading style and preferences. Finally, we'll provide some printouts that you can physically have on your desk each day to make sure that you're constantly following your routine and improving your overall performance rather than just going around in circles. These will help you stay on track and also provide a very useful log that you can look back over as your trading career progresses. It will also help when you're working on your psychology and trying to improve your weaknesses as a trader. So, before we get into these 4 phases, what we're going to do now is just get you up to speed with everything you need in order to be able to actually sit at your desk and plan your trades. The first thing we need to look at is an overview of the tools that our traders use and that you will be using from this point on. These tools include research articles, news feeds, charting software, and of course, trading platforms. So let's begin with research articles. A research article is anything that gives you an overall flavour of what is going on in the market generally or with a particular currency. Now, the purpose of an article is to help you tune into what has been happening so that you can start to formulate an idea about what might happen in the upcoming session. These articles do not necessarily give you specific trade ideas, although sometimes they can, but they do allow you to be in step with the overall market. Researching the market by reading these articles is the first stage in your overall routine and should be done every day before you even look at the newsfeed or a chart or a trading platform. This allows for a top-down approach that will help you zoom in on a particular pair and gives you a much higher probability of success because the chances of you missing something important are of course vastly reduced. You should have your reading list from the Institutional Fundamentals course, and these are perfect sources to conduct your research from. You're looking for any article about the major currencies that you trade and the central banks that control them. We'll go through the process of reading an article later on, but this is the general idea. On top of these sites, there are other sources of information that of course can provide valuable research and overviews. For example, Many traders subscribe to various analysts and receive text or email alerts when they have some new information on the markets. This can be achieved by following these types of sources on social media, with Twitter being one of the most popular platforms to get market rumours and research extremely quickly. Now, research can also be via paid sources, and there are various research terminals available ranging from MNI to Reuters to the most famous of all, the Bloomberg terminal. These premium research sources are not vital and only provide a very minor advantage over the non-premium options. The internet naturally allows almost any information to be found quickly now and can be viewed as the ultimate research terminal in itself. Wherever you source your research from, there are 4 key points that you are looking for in order to extract the most important information from each article that you read. So, the first thing you are looking for is the currency pair that has moved. The second thing is the direction that the pair has been moving in. The next thing is the reasons why that move has occurred, and then finally we need to see what the analysts are saying and what their expectations are for that move into the future, and of course the reasons behind that. So with this in mind, let's walk through a research article together and then analyse it to see what information we can get from it and how we can use that to build a plan and of course find a trade. As you can see, this is an article that we're going to look at. Again, the source can be anywhere. I'm looking at one here in our feed, but you can of course use any of the sources we've talked about. Now, look at the headline first of all. Australian dollar may hit US 50 cents as commodity prices fall, Kaizen Capital says. So, the first piece of information we're looking for is which pair. Obviously, from the headline, we know it's the Australian dollar versus the US dollar. Which direction? Well, as we know, as we can see here, the direction is down because we need to do at the time of looking at this article, the price is at around the 70 level. So we know they're talking about the price falling. And then the reasons. What are the reasons why? Well, we can see the first paragraph talks about commodity prices sinking and basically those general things affecting the impact or having an impact on the Australian dollar. We've also got a reason down here with the Federal Reserve thinking about lifting its target rate, which of course is going to be dollar positive. So of course the Aussie dollar pair will fall based on that as well. So there's lots of stuff going on, lots of reasons given on, and basically all you need to do is scan through the article and find out what those reasons are. And there should be quite a few, the reasons should be very clear. It should be kind of the main theme of the article, that's the point. And the final thing, what are the analysts' expectations? Well, basically you can see the analysts expectation from the headline. They think the Australian dollar versus the US dollar is going to get as low as 50 cents because of what's going on with commodities and because of what's going on with the Federal Reserve and because of where the price of the pair is right now. So basically, we can look at that, look around the market and think, does that seem reasonable? And then that just gives us a very good idea for what's going on with the Australian dollar and what potentially is going to move the market. Now, it doesn't mean you want to go straight into the market selling Australian dollars, but imagine before you'd read this, you look at a price chart of Australian dollar, US dollar, you haven't really no idea what's going on. After reading just this one article, now you've got a much, like 100% deeper understanding of what's happening with the Australian dollar, US dollar, which way the analysts are expecting it to go and why. It just gives you a much better overall preparation for your trading. So the more articles like this you read, the better prepared you'll be until finally you've got so much information flowing around that you'll be just having trade ideas pop out at you and you'll know exactly which pairs and which currencies to be focusing on based on everything that's lining up. Of course, if you get like several articles from lots of different sources saying roughly the same thing, you know it's a much stronger theory. If you just get one article and you don't really see it or hear about it mentioned anywhere else, again, it's probably not worth listening to. So you want to get, social proof, if you like. You want to get lots of different analysts backing each other up inadvertently via lots of different sources so that you can see for yourself exactly which currencies you should be selling and which currencies you should be buying. And this gives you a very good overall fundamental big picture of which things you need to be focusing on the most. As you can see, the process for deconstructing any research article is pretty simple and straightforward, and once you extract these 4 pieces of information, you can then start to build a big picture and put all the different sources together to really see what the market is focused on and which way certain currencies are most likely to be moving over the coming weeks. Think of this process as building the foundation to your trading bias and any potential positions that you might look to take. Once you've conducted your research, the next step is to check the news feeds in order to catch up on the latest sentiment moving the markets over the most recent session. Again, there are many varieties of premium news feeds with costs ranging from thousands to hundreds of pounds each month, but there's very little difference in this age of information. All professional traders in every single firm, fund and bank on the planet have access to real-time news feeds, and many pay thousands of pounds every month just to have this information. So for anyone thinking that it may not be important, think again. And if you're going to succeed in this program, accessing a real-time news feed has to be one of your main priorities, not just as you learn, but for your entire trading career. A feed should give you everything that is relevant and, most importantly, everything that is currently driving market sentiment at that precise moment. The goal of the feed is to find out quickly what has been driving the price during the most recent session, and also alert you to anything that happens unexpectedly in the middle of the current session. The evolution of the audio squawk is an interesting story and began not that long ago across trading houses in the city, not too far from where we are here. As we've already looked at, there are literally hundreds of possible news sources, all with their own unique aspects and all with their own price tag. It makes no practical sense for a trading firm to kit out every single desk with all these tools, because trying to follow all these news flows would turn into a full-time job in itself. However, at the same time, the traders needed to know exactly what was going on, have access to the latest research and developments while being free to execute their trades without distraction. So the solution was an audio squawk desk. These desks would be set up in-house in an area away from the trading floor, or sometimes in an entirely different building, and would consist of a room full of analysts whose entire role was to monitor all available news flows on dozens of monitors all day long. These rooms would be connected to the main trading floor via a sound system, so that when something major happened or came through the wires, it could immediately be squawked to all the traders at once. This meant that the traders could focus on trading without missing out on anything important. Now, over time, these houses developed and grew and also provided text headlines so that everything that was squawked could also be written and displayed on a screen, so that traders could go for lunch or take a break and instantly see what has happened when they return. After a while, these houses were a normal occurrence at large trading firms, and a niche was born, because it was very soon realised that demand for this type of information was strong from smaller trading companies that couldn't afford lavish analyst houses to individual traders managing their own money. This led to new squawk companies setting up independently and offering their services to multiple trading firms rather than just being dedicated to a single one. This brought the costs of this information right down and made it much more widely available to the market as a whole. This allowed firms to cut down the size of their in-house team to just a few analysts, saving costs while still having all of the benefits. The news feed we have here has been created through the course of this evolution, and by combining white label agreements with these analyst houses and incorporating the research of our own team, we are able to give all of our traders and of course our trainees one of the very best feeds in the industry. In order to use it correctly and get the most from it, it's of course very important to understand exactly how it works and how you should be approaching it each day. So to help you with this, we're going to be walking you through the feed step by step, looking at all of the information contained within it, and most importantly, how you should be incorporating it into your trading to remain profitable. Okay, as you can see here on the feed, we've got the feed here, basically the whole thing on the screen. Now the first thing to talk about, of course, is the audio. The audio doesn't play continuously. The audio is designed to be only the most important market moving events, okay? So rather than just have someone talking all the while about any old headline that's coming through, because across all the news feeds around the world, there's headlines coming through pretty much every minute, that would just get distracting and annoying. The analysts are trained to only squawk when something actually important and potentially market moving happens. So the audio isn't a continuous thing, it's designed to just be the most important stuff, so that when it comes on, everyone knows to pay close attention. Next thing we have are the text headlines. You can see here that you can scroll back and see exactly what's been going on in the markets, what's been happening, what their main headlines are in between the time when you were last at your computer, and of course the current time now. So it just gives you, the text headlines are just a really cool way of approaching that. Now, if we look at these a little bit closer, you can see that each text headline is clickable and you can actually read extra analysis. So for example, if we're looking at some figures that have just come out here, you can see that these manufacturing figures from Brazil have just been released. You can click on them, and if there's any more information there, you can find it out. You can see US mortgage applications here. Again, and if there's anything to say, that will be in there. Now, there isn't always something to say. There's not always any extra analysis there, and as we click through these, you can see there's not really that much going on, but sometimes when we have extra stuff going on, there will always be extra stuff hidden in the headlines. You can see when you've got this little bubble icon here, that means there's something extra in it. So if you can click here, you can see it opens up and all the stuff is in there. So that text headline is very useful, and that can actually be quite a useful research tool in itself. Now, you'll notice at the top of the feed, on our particular feed, we have the upcoming risk events fixed to the top. You can see what time they're due to be released, and you can also see how many hours left until those risk events come out so that you're fully prepared. Now, let's say you're trading the FOMC rate statement later. There's 6 hours to go from this point. You might want to do your preparation in advance or the day before, so you can basically just click on this, and this is a whole report basically about what the risk event is. You get a full description, you get the summary of the risk event, and of course you get the expected market reaction, which of course generally gives you a nice little trading plan and how you can approach it. Now, when it's a data point, you can see you get all the extra information as well. So you get the source where it's being released from, how often it comes out, the period that this release is relative to, and most importantly, the prior expected high and low. So you can see the prior reading on this one example, Australian building approvals, was 2.4%. It's expected to come out negative this time around, and if it does come out worse, the lowest figure is minus 4%. The highest figure is plus 2.6%. This is all useful information when you're looking to try and trade risk events, which we'll talk about much later on. But basically, if you're looking at the calendar and thinking, is the FOMC rate statement important today? All you need to do is come to the top of the feed and read through the risk event report. If you're wondering whether Australian building approvals is going to give you a trading opportunity, again, come to the top of the feed, read the risk event report, and it will give you all the information you need to decide whether or not you want to be trading that risk event or whether or not you want to be on the sidelines. Now, what we're going to do next is we're going to go through the filters, and you can see at the top of the screen here we have 5 key filters. From left to right, we've got trade alerts, central banks, bank order levels, sentiment, and of course risk events. Now, if we'll go from left to right, if we click on a filter, it filters the feed so we can only see the stuff relevant to that filter. So you can see if we click on trade alerts, we only get the trade alerts posted as we see them. Now, the trade alerts are generally very useful because these are trades taken by either our in-house trading team or the major investment banks from around the world. So if we click on this top one, you can see the National Australia Bank has entered a long position on Aussie New Zealand. We get the exact trade. We also get the rationale for why that trade has taken place. This one down here, again, you can see this time it's Credit Suisse that has entered a trade and they're selling New Zealand dollar, US dollar. Again, they give all their details and their rationale. We also have fair values for each currency. And of course, lots of little notes from banks and other stuff like that. Again, this one here is another Credit Suisse one. We just see here, City Index, we're buying pound dollar there. Morgan Stanley. So you can see these are not just small companies or trading firms, these are major investment banks, and this gives you a very good overall view of what the rest of the market's doing. If the big investment banks are buying or selling a certain currency and you see the trade alerts and you read the rationale and it makes sense, that's probably a good idea. You can maybe look to kind of trade around that trade alert. Maybe not necessarily copy it exactly blindly, because that's not the point, but it just gives you a very nice extra layer of analysis to see what the banks are doing, not just what their analysis is, but how they would actually play that analysis in terms of taking a trade. So you get entries, stops, targets. It's all there to give you that extra information. And generally, these are coming through most days. It's not few and far between. There are quite a few trades coming through every week, at least 4 or 5 trades every week, maybe even more sometimes. And this is again a really good overall picture. Now, if we leave that filter, we could see the next filter here is central banks. And central banks filter is of course the research. So what's going on with the central banks? What are the central banks doing? What are the analysts writing about the central banks? What's the market expecting? And you can see all this information here. Again, you only really want to read what's on the first page of the newsfeed because anything later on is probably old news. But if you keep up to date, this is literally updated several times every single day, and it basically uses articles from around the internet. You can see this one here from about the FOMC is from FX Street. This one here is from EFX. Down here we've got we've got a few from EFX there actually. And then we've got one from AFR here. So all the different sources, we've got Bloomberg, Reuters, MNI, all the different sources, all the different things releasing news and articles that are freely available over the internet are all kind of put together into one place. So you don't really need to go off doing too much external research outside of the feed. Our analysts will put all this information in there for you. Now, the other thing is our analysts also write our own in-house research when there's something major going on. So you also get the benefit of that exclusive research as well. And of course, they've been trained to write from a trader's perspective and in a way that's going to help the professionals to find positions in the market. So that's the central banks. Let's go to the third one. This is bank order levels. And this is fairly straightforward. These are basically all the levels where the banks are placing trades. So you can see on this one, pound dollar, for example, we've got medium offers. That means some sell orders, the different prices. We've got stop losses here. We've got strong sell orders and stop losses at this price here. You can see where the current market rate is. And then, of course, below that, you can see where the buy orders or the demand is. All the different prices. This information comes directly from banks and brokers. So banks leak where their clients are placing their biggest orders. Brokers leak where their clients are placing their biggest orders or stop losses. And they're all kind of filtered and put into the feed for each major currency pair. So again, this is pretty useful information. So remember we talked about earlier about finding good confluences to trade. If you find a nice technical confluence for a day trade and you've also got some bank order levels in there, a big bank is buying from that exact same price as well, well, that's just going to add even more to your trade. So you want to look at these levels pretty carefully. You want to look for the strong and the medium offers and the demand. Basically, where those banks and brokers have got clients placing a strong concentration of orders, they're the prices that you want to be watching very closely. Again, it's all exclusive information that you find very, very useful in your day-to-day trading. Then we go to the fourth one, which is sentiment. As you can see here, the sentiment, basically sentiment is to tell you exactly what's moving the markets right now, okay? So if you've just gone for your lunch or if you've just come to your trading desk, you click on sentiment, it will tell you exactly what is moving the markets. And you'll see we've got these forecasts here. You can see the current sentiment for the New York session forecasts, the current session, the London session updates. And again, you can just see what exactly is going on and a full explanation of what prices are moving, what currencies are moving, and of course, why, okay? So, this headline, for example, is a really good one. You can see pound remains the best performing currency today, with euro supported by mergers and acquisitions related flow, such as the purchase of Quintain Estates and development by Lone Star Funds, as well as Zurich Insurance's offer for RSA. So this is just little bits of information explaining why the prices are moving the way they are, so that you can take this information and basically find trades, okay? So the sentiment one is absolutely key if you are day trading and you stepped away from your desk for an hour or 2 hours. When you come back, first thing you need to do is check the sentiment to tune straight back in. Now the final filter, of course, is risk events. And you've got the risk event reports up here, but you also get the risk events, what's coming out. So you can see here, you get today's risk event calendar that's posted every day. And you can click on that to open it up. So you can see all the risk events coming out, but most importantly, it tells you how the risk events came out. So if you've missed it, let's say you're away from your desk and you want to know how consumer confidence came out yesterday, you just click on risk events to filter all the other stuff out. There is consumer confidence. You can see it came in 90.9 versus an expected 100, so lower than expected. And then you can see all the extra information down in here to give you the full analysis of what that risk event means and whether or not it's important to the market and what that market reaction was. So if you want to catch up on that stuff, that's where you get that going into, or coming out of those risk events there. So you can prepare ahead of time with the risk event reports, And then as soon as these risk events happen, the reports just get filtered back into the newsfeed and basically forgotten. So you can get kind of a before and an after by using the risk events at the top and then the risk events filter to search for when these actual releases came out and of course what happened. Now the final thing to look at on the feed, of course, is a keyword search tool. So maybe you want to look for something specific. Maybe you want to look for what's been happening with the European Central Bank. Maybe you want to look for what's been happening on a particular currency like the Japanese yen, or maybe a particular central bank member like Mark Carney. Whatever it is, it doesn't matter what it is. If you want a specific search term, you just enter the keyword there, search the feed, and it will bring up only that relevant term into the top of the feed so you can get the information quickly and efficiently. So that's the news feed. That's how we use the news feed. That's all the filters that are there to help you with your trading. And basically, as you can see, it's pretty much a dashboard for every piece of information you need. You don't really need to leave. In fact, most of our traders don't even usually really leave the news feeds too much. Probably 85% of the analysis that we do is done via our own in-house feed because we have everything coming through into one place. So as you can see, this is going to be very useful. This is going to be something you're going to be using and staring at a lot through the next few months as your trading career takes off. And you need to get used to it, have a play around, watch it for a few days or even a couple of weeks. And then as you start trading, make sure you keep your eyes very firmly fixed on this feed because it's absolutely crucial to keeping you in the loop and making sure that you're going to be consistently profitable with your trades. As you can see, the news feed is one of the most powerful tools that you'll ever use, and you will get clear, high probability trading opportunities from it week in, week out, while protecting yourself from anything that occurs out of the blue. Now, the next tool we're going to look at is one of the cornerstones of a trader's day, and neglecting this can have dire consequences to your overall profitability. The tool is, of course, the economic calendar. Now, the economic calendar provides several pieces of really key information that you need to be aware of as you head into the session. First of all, you need to know what events are taking place, whether or not these events are expected to make a big impact on the markets, and then find out the details behind these expectations. One of the worst mistakes new traders make is to not fully prepare for a trading day and have a perfectly good trade ruined by some news event that was in fact known and quite predictable. Calendars are freely available all over the internet, and of course you will have access to our calendar each day. So what we're going to do next is just walk through one and just highlight the most important elements that you should be focusing on as part of your daily routine. Okay, as you can see, this is the calendar. This is our calendar that we use. As you probably know, this is uploaded in the feed under the today's risk events. You can easily see this every day before the London and New York sessions. And basically it contains all the different events coming out. And if we just scroll down through it, you can see all the different releases, and you can see something called speakers and auctions, which are just bond auctions and stuff like that. And then of course you can see things like earnings from the stock market, and of course option expiries from around the market. So our calendar that we use is really comprehensive and tells you everything you need to know, everything you need to be aware of for the upcoming session. So this is why we use this calendar basically. So let's have a look at what's coming out on this day as an example. You can see there's lots of different events, but only some of them are bold. Sometimes they're in red, some calendars have them in red, our calendars have them in bold. The bold ones are generally the high impact ones, and these are the ones that will have a risk event report attached to them in the feed. So if you're thinking about trading pending home sales, for example, you can check this out in the feed. Consumer confidence from Germany, for example, again, there'll be a risk event report on that if it's bold. Now, let's look at this. Let's start from left to right on this calendar. First of all, we've got the time. So you can see the time of the release in the UK or whichever part of the world you're trading. You've got the time of the release there. Then you've got the country. So you can see this one here is Germany. You've got Switzerland, France, the UK, the US, all the different countries, Japan up here. You can see which countries are there. And then, of course, you can see what the figure is. You can see, like I said, we've got consumer confidence on this one. We've also got pending home sales from the US, crude oil inventories, etc. And now, the right-hand side is probably the most useful information. This is the key information that you're going to need to use when looking for trade opportunities. Now, let's take a look. Let's first of all start from the far right-hand side. you'll notice it's got something called previous, okay? The previous is what the number came out at last time. And that's important because we can match the previous with the middle one, which is the expected, okay? So you can see the previous here was 10.1, the expected is 10.1. So basically it's expected to stay in line and not get worse, but not particularly get too much better. And basically what we're looking for is deviations between the previous and the expectation. So if the expectation is for it to come out worse than it did previously, then that could potentially give us a trading opportunity. Vice versa, if it's expected to come out better than it did previously, that could also give us a trading opportunity. If it's the same, then generally it's not really going to give us anything. And the next step is to look to something called the deviation. So the deviation is when this news release actually comes out, does it come out as the expected or does it come out different from the expected? If it comes out different, this is called a deviation. So basically, if it comes out, let's say for example 10.5, that's going to be much better. If it comes out 9.5, that's going to be much worse. Now you can see, to give you an idea of what high number and what low number is good or bad, you can see we've got something called the high and the low. So the high is the highest level that analysts are anticipating. So the most optimistic analysts for this figure expect it to come out at 10.3. So if it comes out over 10.3, that can be considered absolutely fantastic, like way better than anyone could even imagine. It's probably going to get a reaction in the price. If it comes out below 9.8, this is the forecast from the most pessimistic economist. So if it comes out below 9.8, you know this is pretty serious and the market's probably going to sell this thing off because it's so negative. So there's obviously two key things you need to look at from a calendar perspective. You need to look at the previous versus the expected, and then when the data point actually comes out, you need to measure the actual, what it actually comes out at, in line with the low expectation and the high expectation to see whether or not we've got a deviation big enough that's going to get the market moving. Now, if we just go back to the news feed a second, one of the things I'd like to point out, I'm just going to go to the risk events filter. One of the things I'd like to point out is if we get a number, you can see the consumer confidence number came out here. If we get a figure that is a headline figure, you can see the headline figure, but if you click on it, you'll also get all this extra information here. Now, this is called inside data, basically, and the data tells you the details behind that headline. So you can see the one-year consumer inflation rate forecast was 5.1, the jobs hard to get was 26.7, and jobs plentiful was 20.7. Now, you probably won't have heard of any of these, and you probably won't need to until something major happens. The biggest reason we look at this inside data is because very often the market won't react to the headline, the market will react to something inside this inline data, inside data. So you can see the other section we've got is reaction details. So as you can see the market reacts, there'll be an analysis and an explanation of what happened. So if, let's say, for example, the risk event came out positive, but the currency sold off, you might be wondering what went on. Well, it's very confusing. Why did it happen? If you click on these reports, the explanation will be in here. So you can immediately understand within 2 minutes or 3 minutes of the figure coming out, you can immediately understand why the price is going the way it is and whether or not you think that's going to continue, basically, okay? So it's quite useful information, very useful information, in fact. So you combine the calendar with the aftermath of the risk events, and all that in total gives you a very good picture of what we're expecting, how we're expecting the market to move, and then even in the aftermath, how we expect the market to react after, and whether or not it provides with a trading opportunity. You should look at the calendar every single day, and in a nutshell, that's basically how you want to be reading it and using it. And it's just a case of practice. Go over it. If you've got any questions, ask your mentors, or you can even bring it up in the daily analysis briefings. But basically, you'll see the analysts and the traders, the senior traders, and myself sometimes go through the calendar every single day religiously as part of their day trading routine. Looking at the day's economic calendar should be a firm part of your daily routine before the markets open each day. And if you're holding positions over several days, then you should also be aware of what is coming up over the coming week or two so that you are fully prepared. Remember, the market frequently trades into these risk events, so it's vital that if something's coming up and you're in a position, it can seriously impact you. We will look in a little bit more detail exactly how you can trade risk events later, but for now, it's vital that you're prepared for them, and using the calendar is a very simple way of doing this. Now, once you've completed your fundamental analysis using the array of tools that we've just looked at, you should have a very clear idea of which currencies you want to sell and which ones have some more positive sentiment surrounding them that you can buy. Remember, the general principle of trading is to buy currencies with strong sentiment and sell currencies with weak sentiment. And the more extreme the divergence is, the easier your trade will be. Buying a strong currency against a neutral currency that doesn't really have much sentiment driving it either way is still a decent trade, but the best ones are when we have two good reasons to trade currencies in opposite directions, and you simply select the corresponding pair. Now, assuming you've reached that point, you need to then decide whether or not you will just jump straight into the market or wait for a specific entry, and these type of decisions generally depend on the type of trades you're taking. We'll be looking at all of the various trading opportunities that you will come across and how you should approach each one later on, but for now, we will deal with the technical aspect of using your charting software to identify these things. As we've learned in the technical analysis section, your charts are merely a combination of certain technical tools, and we covered these in more detail during that section. But these things like candlesticks and support and resistance levels all come together to give you a clear visualization of the price and where the market could be inclined to trade from during the upcoming session. There are hundreds of different charting packages available, and as you develop your business, you will gravitate towards ones that fit you better. The platform that we use to train you will be the MT4 platform created by a company called MetaQuotes. The reason we use this platform is because it's robust, well established, and fairly easy for new traders to navigate. The advantage to us as a firm is that it also allows cross-broker trading, allowing clients and potential investors to test your trading skills before moving their funds to our broker. The MT4 platform is operated by almost all brokers, so it's very interchangeable and simple to trade at multiple brokers using our in-house copy software. This is what you will most likely begin your training on, and even as you progress to managing client accounts, it's probable that you will be trading with MT4. Only when you graduate to trading funds or institutional money will you be operating on a proprietary trading platform, and of course, by the time you reach that stage, you will be well versed in everything you need to know. So let's take a look at the charting side of MT4 so that you're familiar with some of the basic analysis functions and can get to grips with exploring it on your own in more detail. Okay, as you can see here, we are back to the charts. This is an MT4 terminal. This is an MT4 chart. Now basically, what we're going to look at is just very basics of the chart. Now the thing about the MT4 chart is you will never stop learning new techniques and tips and tricks. I've been trading with the MT4 chart for almost 10 years, or probably over 10 years now, and I'm always learning something pretty much every month. There's some trader points out something, or there's a new little tip or trick to using the platform better. So your learning on this platform will basically just keep evolving and getting better. But there are some basics, and the goal of this particular little presentation is to just get you up to the point where you can start having to play around. You'll of course be starting on a practice MT4 account, so you won't be trading real money anyway. So you can have a little play around, work out your charts, get everything set up as you like it, and of course play around with some trades when the time's right. So let's take a quick look. First of all, the price is on the right hand side. This is the price of the pair that you're trading. You can see the pair is in the top left hand corner here, and the price is on the right hand side there. The date and time of course is down here. Now at the top you'll notice all these little windows. This you can see M1, M5, M15, that's minutes, H1, H4 is hours, D1 is days, weeks, months. So whichever time frame you want to look at. So if we click on the 1 hour chart or the 4 hour chart, you can see this is what's been going on the 4 hour chart, this is what's been going on the monthly chart, this is what's been going on the 5 minute chart. So you can see it all pretty much looks exactly the same no matter what time frame you're using, and that's one of the things about technical analysis. So first things first, how do you go from a blank chart like this to having indicators and stuff on it like this? How do you do that? Well, very simple. You can see at the top here, and at the top you can see something called insert. So you simply click on that, Then you go to indicators, and then you go down to custom, and that's where all the indicators that we use are. So all the indicators, or most of the indicators that we use, are custom indicators. So we've got the pivots one here, we've got the daily range calculator, etc. Those ones just get applied to the chart, and when you click that, you click OK, and then they appear on your charts like so. Now, each individual indicator can be like manually edited. So you can either click on the indicator directly, or you can right click anywhere on the chart and go to indicators list, and basically you can see all your little indicators on the chart here. So let's say you want to adjust your daily range calculator. You double click it, it opens up a new window here, and you can see you've got all these different settings, and the visualization, for example, maybe you only want it on your 5-minute chart or your 1-hour chart. You can just select which time frames you want it, or maybe you want it on all time frames, etc. So just some cool features. So if you want to edit your indicators, all you need to do is right click, go to indicators list. If you want to put the indicators on the chart, all you need to do is insert, go to indicators, and then probably custom indicators, and just click it off the list, and it will appear on your chart. Now, the other thing, of course, is your zoom. I like to have this zoom, but if you want to zoom in, you can just click up the top little magnifying glasses at the top there. If you want to zoom out, you can do that to your heart's content and see you've got a really nice zoomed out picture. And basically, there's quite a few zooms. You can have, either really zoomed in, or the more you click it, the more it zooms in or out. So again, that's just up to you. It might just help you see it more clearly. Again, if you right click on the chart and go to properties, you can see the colors here. You can change the colors of the chart to your preference. You can change all sorts of different things on here. Again, the goal isn't to go through every single setting with you. The goal is to make sure you know how to do it. So literally right click on the chart and all the options are there. You've got indicators list, you've got properties down here. You can navigate your way around and kind of just have a little play around with whatever you want to do, basically. Now, the next question is, once you've done that, how do you find your pairs? Well, the pairs that you've got open will be along this bottom section down here. So you can see you've got Euro New Zealand here, you've got Pound Yen here, you've got Dollar Yen here, and all the pairs are there for everyone to see. You've got Euro Pound here. Now, what about if you haven't got a pair down there and you want to get one visible? So you simply go to this Market Watch window here. You can see this little box with the green and red arrow. You just left click on it, and there are all your currency pairs that you can see, all the currency pairs that your broker offers that you can trade. Now, if you don't see a big long list, you simply right click on it and just select Show All, and you'll see all the currencies appear. If the currencies aren't on your list, contact your broker. The chances are they don't support it, but the brokers we use, of course, that you'll be having your practice on and ultimately your live account, have got pretty much every major currency pair that you're going to need. So that's all there in there. And then the final thing to say is basically that's how you get the rough introduction to the MetaTrader 4 charting. That's how to set it up. My template, of course, is there. You could download the template here in the technical analysis video, or of course in the downloads and resources section, or of course you can just ask any one of your mentors or your coaches and they'll guide you and show you how to get this template set up on your chart. So the final thing to say about the charting is that MT4, the other reason we use it here is because it's so robust and so popular. It's got so much support available to it. You can literally go to YouTube and there's infinite amounts of video tutorials teaching you how to use MT4. You can literally Google, how to find a currency pair on MT4 or how to change the color of the candlesticks on MT4, and there'll be a video or an instruction manual telling you how to do that and explaining it in full detail. So there's no need for us to include all that in there. Like I said, that could be a 30-hour course in itself. It's all freely available online. You can go away and do your own personal research for that. That just gives you a very good grounding into how to use the charts and get going with your MT4-based technical analysis. As you can see, the software is fairly basic, but if you require any assistance, then like we said, we're here to answer any questions that you have, your coaches and your mentors throughout the program, and you should just contact one of those mentors that we have here for any extra help that you need. But of course, we encourage your own personal research for your own benefit. Getting to grips with the charting software and technical analysis in general is just a matter of practice over time, but hopefully this guide has got you to the point where you can at least begin this process straight away. Now, In the MT4 charting platform, there is also a trading platform integrated. This allows you to see your positions without leaving your charts, which simplifies the whole process of trading and is another reason that we use the MT4 platform here. However, as your career develops, you will eventually gravitate away from the MT4 platform and onto platforms that are more bespoke and better for your individual needs as a trader. For example, when trading institutional funds or under any kind of fund structure, you will most likely not be trading MT4 any longer, because as you trade tens of millions of pounds, you will need to ensure that connections and execution of your trades is perfect in every way, and even the slightest millisecond can possibly cost you hundreds of thousands of pounds. There are many various trading platforms that you could use, from proprietary broker ones to terminals from the larger organisations such as Bloomberg, which allow you to deal directly on the interbank market. As you make your way through the program and progress beyond managed accounts, you will learn all about these extra systems and platforms. The main reason for discussing platforms here is that you can understand the flow of trading in your head, and the trading platform is what comes last in your flow. So we do our research, then check the news feeds, then look at the economic calendar, then conduct our technical chart analysis, and finally go to the trading platform where we actually place the trade. The flow is consistent, that flow never changes. So let's take a quick look at the MT4 trading platform to see how it integrates well with the charts and see how you can place basic orders and get to the point where you can navigate your way around and start placing practice trades in your demo account. Okay, as you can see on the chart here, we can see the chart here now. To get to the trading end of things, again, all you need to do is right click on the chart and you can see a link called trading. If you click on that, you go down to new order here, and this brings up a new screen where you can then trade the pair that you're on. So if you click on the pound yen chart, it will automatically bring up an order to buy or sell the pound yen. Now you can change that in there to whatever you want. I don't recommend you do that. And then literally as simple as clicking sell or buy, you'll be entered into the market. Now when you entered into the market, you'll see the trade appear in the terminal. Now to access that a little bit quick, you just go to the top here, you can see the little white book with the blue column on the left hand side, and when you hover over it, it's called terminal. If you click on that, left click on that, it opens up your terminal. So you can see, if you just drag this up, you can see a few things here, the balance of the account, you can see what margin you've got, how much equity you've got there, and you'll see your trades, as you can see here, that are in play. So you can see in play here at the moment, I've got a euro-dollar trade short on, and I've also got an Aussie-New Zealand short on in the market currently. Now, the minute you click into the trade, you will then get the trade displayed in the terminal and you'll follow it. Now, you can basically follow this in dollars and pounds, or if you go to down, if you right click on the actual trade itself, again, as with all the MT4 features, to try and edit something, usually you just right click on it. So with a trade, if you want to edit it, you right click on it and you can just expect maybe display it in pips, or I prefer profits, but that's just personal preference. And then of course you can, just check out anything you want basically. It's all there. You can see the price where you got in, the stop loss level, your take profit level, and the price where it currently is, and any commissions that you're paying for taking that trade, of course. As you can see, I've paid on both. And any swaps that which is carry trade interest, which you're either paying or making. You can see on my short on euro dollar, I'm actually paying some carry interest there on that particular trade. Now, the one thing to bear in mind is, so that's very simple. So you place your trade, it appears there in the window. Now, when you've had a trade that's already played out, one little cool feature of MT4, you can see, if you look at the tabs along here, you'll see you've got trade, which is the current live trades, and then you've got account history. Now, if you click on account history, you can basically see what trades you've taken in the past and which trades you've closed out. Now, one really cool feature is that if you're trying to keep a log of your trades and maybe just try and see how it played out, and particularly in your review stage, which we'll talk about later on, you're trying to review your trades and analyze them, what you can do is you can left click on the trade, hold it down, the left mouse button, and then drag it onto the chart. So you can see this is the pound yen trade. We've got the pound yen chart up here, and then you release it and you see the trade on the chart. You can see I got in down here and I rode it all the way up and I just took it off at the R1 of the day up there for a nice little profit. So you can basically see It's just really visual without having to go back through your history and dig out your trades you want to look at. I just drag and drop them onto the charts as I go, so you can basically just see the trade there and kind of just remind yourself and get a review of how it played out and how the price moved from the moment you got in to the moment you got out. Red ones, the line will be red if it's a sell trade, and vice versa. So as you can see, one final feature I want to go over before we finish this is, of course, the trade management. Now, you'll see here, if we just scroll this down, you'll see I've got a sell order in here, this is on euro dollar, I've got a sell order here, the green line, my take profit's down here, and my stop loss is up here. Now, rather than just going to the terminal and right-clicking and editing your trade, blah, 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 maybe you want to move your stop loss or whatever, rather than going through all that rigmarole, you can literally hover your mouse over it, left-click and hold, and just move it. So maybe I want to move my stop loss lower, so I'll just do that right now. And now all of a sudden my stop loss is moved, it's updated automatically in the terminal, and there's no need to mess around with manual ways of doing it, etc, etc, etc. Now I'm just going to put my stop loss back before we move on. But basically that gives you a general idea of how the terminal, well, particularly the pricing terminal is very easy to use. You can do the same with your take profit as well. So you can basically manage your trade off the charts. It's just really cool, and it makes things much simpler and just basically easier to monitor effectively. So you can see, when you're looking at your charts, you can see what trades you've got on. You can see, if you drag and drop the trades on, what past trades you've taken and how they played out. And it all just helps you keep it very visual, but at the same time, extremely basic. We have looked in quite a lot of detail at the overall process so far. Earlier in the course, we looked at how the markets work. We then looked at the 4 pillars of trading, and I've now started building up the process and flow of how you should put all this information together to formulate your own personal trading plan. Don't worry about forgetting anything or getting the flow mixed up, because at the end of the program, you'll be handed some key printouts that will make sure everything is laid out and that you know exactly what steps you should be taking each day before you enter your positions in the market.